The Reserve Bank's decision to increase interest rates by 50 basis points last month has shocked many businesses and homeowners who are struggling to service their mortgage and loan repayments. This, of course, is seen as the economy stutters along a low growth path. Further increases are expected, with FNB, for example, they're forecasting their prime rate of 11.25% early next year. In studio with us to discuss this is Finweek editor Jana Marais. Jana, thanks so much for coming in. This is scary stuff, managing your finances at a time like this. Where does one even start?
I suppose the golden rule is always to spend less than we earn, but I suppose, very few of us actually manage to do that. So some tips is to always pay more than the minimum amount that is required on your outstanding debt, whether it's your car payment or your home loan or your store cards, and really to try and get especially the store cards paid off as much as possible. And I think really with big ticket items like cars and houses, rather be cautious when you think about what you can afford. So make sure you really understand what the operating costs are of those assets and make sure that it's within your budget. So yes, I think paying more than that also gives you that little bit of breathing room. If you're used to paying 500 Rand extra, when the interest rates do go up and your payment is going up, at least you won't feel the impact, quite so quickly.
Talking about those big ticket items, your house, your mortgage, that big question that everybody's been asking, is this now the time to fix your rate?
Look, I think that will depend on everybody's risk appetite, but when the interest rates are already in a rising cycle, it's not the time to go to your bank and ask them, please fix our rate. You probably won't get an attractive deal. Yeah. So again, it's much better to try and, give yourself some breathing room with paying more than you can. And I think also, if you get a salary increase, make sure that you also increase the payment on your bond and not just spend that money on nice to have stuff.
Certainly. There's been a consensus that we will be seeing interest rates going up again. FNB, as I stated earlier on in the intro, 11.25% for prime. Is this true? Is this what's been said out there? Why would analysts say that we are likely to see more interest rates or an increase in interest rates as we go on?
I think a lot of the impact of food inflation, for example, the impact of the drought, we'll only really start seeing that towards the second half of the year. There's administered price increases like electricity tariffs. It's the impact of a weakening rand on imports and the feed through of that on prices, on retail prices for consumers. So yes, I think everyone is predicting further increases. It's the extent of the increases that differ. But yes, I think consumers should prepare themselves for a tough time ahead.
Tough time ahead. Thank you so much, Jana Marais, Finweek editor. Do stay with us, because when we come back, we'll be taking a look at the mining landscape. We mentioned a couple of issues there when it comes to electricity. Well, this is one of the things that particular industry is dealing with. Stay with us. I've got a panel of experts coming right up. Peter, hi, it's Dumi. Can you hear me?
Gee, I sure can.
Yeah, I can hear you.
But I can't see you.
You'll see me only once we go on live, unfortunately. But we already know what we...
That is unfortunate.